Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 14th of December here in 2021. We got three letters. They are Fed, Federal Reserve. They're going to announce their policy changes and their forecasts for the economy and how they are interpreting inflation. And we see that. They saw that yesterday in the Consumer Price Index. That's the CPI. That was hotter than expected. And this morning with the PPI, which is our Producer Price Index, both indicating that inflation is, which we've known that, is a concern, and the Federal Reserve is acknowledging as such. But what will they say? What will their policy changes be? And of course, what will the forecast be? We know they're not going to raise interest rates tomorrow, but when will they do it and how soon? That will be on focus. That will be what we'll be listening for, and the market will react accordingly. So that is where we are with the market in terms of getting ready for tomorrow's session. And of course, that is there's only 8 Fed days and Fed policy announcements per year, but we do have one tomorrow. And of course, that's the 15th of December. On the same day, we'll take a look at retail sales. That'll come out before the market opens. So we may have a sense about the economy or the economic strength based on retail sales. So those are big components or big events that can move the market. That being said, let's just take a look at where we are and get a sense of key price levels ahead of the Fed. So in today's session, the technology sector, right here, the XLK, we'll see it on the daily chart. Now, on the charts I look at, the daily chart is here, and the hourly chart is there, just for short-term traders. But the trend is up, and it remains up, but we did see a deep pullback, and that is in the XLK, in large part because we see them here. I like to sort stocks on a percent change basis on a daily basis each day about where the winners and the losers were. In today's session, the losers, or the decliners, the biggest stocks that declined, that was Adobe. And we'll take a look at some of those. So Adobe was the number one decliner in today's session, and it actually has earnings 2 days from now. So that will be in focus later in the week. That is Adobe, ADBE. Salesforce.com also sold off, and we're seeing these pullbacks or deeper retracements. But I want to focus on our monsters of tech. There is Microsoft. There is a stock that traded very quickly to the downside. That was one of the headline news in today's session about the technology sector and the downside pullback. But it also occurred on a strongly trending stock, and that's Costco. It was down as well. But when the dust had settled, we had Google off 1%, a little more than 1%. Netflix, not necessarily a big market cap stock, but it did come off. And we'll take a look at Tesla, which had a recovery. And by that, I mean Tesla shares were down much more in the morning session and recovered to close. Not quite positive, but close to unchanged. And that was on an intraday reversal. So Tesla was weaker earlier, and the same was true with Apple. And Apple is coming deeply off an overbought condition, and that's off the 180 per share level. So those were those technology stocks in play, and that pulled the XLK to the downside. And of course, the Nasdaq. Nasdaq was the weakest in today's session. All other indices, in fact, the Dow mini futures, the Dow Jones, that was relatively unchanged. So taking a look at where we are in the broader picture, the Dow mini futures, Dow Jones index, is generally trading more sideways. The Russell itself, the RTY, our small cap index, also is trading more sideways, all ahead of the Fed. And that is back into a key support level. We'll update this just briefly. And I think of these as a zone. And the zone is roughly the 2125, maybe 2150. But there's no exact science to this. If we think about the 2200 level as fair valuation, anything above it is above fair valuation and generally leads to short sell or put type tactics to get a pullback. But on the other side, anything down into the support level, that tends to be a buy or a call type strategy. And that's just playing mean reversion. The mean being about the 2250 or a little bit in that zone as the midpoint of the sideways trading range. That's going to be true in some stocks, but the Russell itself, of course, if you trade options, that's on the IWM, And the similar levels there would be about $21 or $211 and about $230 to $35. Fair value at midpoint is about the 223 level. Looking outside of the equities, we'll see crude oil up there with the stock market had a deeper pullback. And like the Dow, crude is in a sideways trading range. No trend present in crude oil as it stagnates or trades between roughly the 65 level and we'll just say the 85 level. That's the broadening range in crude oil. Gold itself continues to be sideways and it just trades similarly in a chop zone. And as gold loads, we'll take a look at it as it plays into the chop. Where is gold's chop? Gold's chop is roughly from about 1700, maybe 1725, up to about 1900. So any type of fade or similar to the Russell with the fair value around 1800, long or buy or call opportunities set up into or near the bottom or under fair value. And of course, short or put plays set up into this 1880 or 1900 in the gold market. When the market's at fair value, there's not a lot to do unless you're trading very short term or intraday. And if you trade options on GLD, those similar levels are about 160 or 161 and about 175 or 176. I think the key focus in the next few days will be on the bond market. So keep reference of I like to trade TLT for my accounts, but if you do trade bonds, you might trade off in ZN, you might sell premium or purchase futures positions within the bond market. So the ZN is our 10-year Treasury note. ZB is the 30-year Treasury bond. Both are considered sideways, so I think we could title the video Sideways Markets Abound. But of course, we'll step in front of the Fed and really plan for the Fed and how these sideways ranges contribute or how the price trades within those. And that just sets up very short-term trades. Not a lot can be done within a sideways trading range except for playing the extremes or waiting patiently for a breakout. So that being said, in today's session, where did we end? Down, but down where the technology sector was the weakest. So here is the Nasdaq, and this is a good way to frame out the market. Market Watch here in thinkorswim, Visualize tab, and it will give you indexes or indices right here. So I tend to stay and trade within the S&P 100, which is right here, and it's just a little tighter representation of the stock market in our key sectors. So where were the weakness or the weakest sectors? They were, of course, technology, a little bit into industrials, and those are the big decliners of today. Pockets of strength came from financials and to an extent the staples. So we see that playing out on a grid where the boxes are sized by market cap. And that's how the indexes or how the individual stocks contribute to the Nasdaq and S&P. The Russell's much more broad. We don't have that type of large cap domination as we would in the Nasdaq, where just about the entire index is traded or made up of our monsters of tech. And they were all, without exception, red or negative. There's Adobe, and you see that the market cap of Adobe, even though it was a very, very weak stock today on the list, was only about, I say only, but $300 billion. That actually is a large market cap, but not compared to Microsoft, which is about $2.5 trillion. And what all eyes are focusing on is when will Apple hit that $3 trillion market cap level? Has not done so yet. And of course, outside the equity market, we'll finish by looking at the VIX Volatility Index, which is more of a cycle. So we had a cycle high, coming back down, and volatility is gently, slightly picking to the upside. Same is true in VIX VX Volatility Futures. So this tends to spike low and then spike to high and then come back down. So that's one quick way to reference the market or what the structure of volatility is in the broader sense. So here we are. Our key levels finally in the S&P would include about the 4,600 level. And that's going to be a potential support level. Of course, breaking that on a negative or bearish Fed announcement tomorrow afternoon could send the index back down to the 4,500. So that is the downside potential. Of course, anything under that 4,500 does open up a, call it a drop zone or a trap door toward about 43.50. But until that happens, our focal point right now, as we look at the Fed, as we see their policy and how the market reacts to how they see inflation and what they quantify, what they talk about, and how they say the economic forecast, and of course, how many rate hikes will take place in 2022. We should get a better picture tomorrow. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 14th, 2021.